The top three things in Keith's macro notebook this morning are the U.S. dollar, oil, and the U.S. 10-year yield. Starting off with the dollar, it's the opposite of the Fed's policy to inflate, which is deflation. Dollar up, rates down, gets us more of 2004 continuing to crash. The carry trades are continuing to crash, which is primarily energy and basic materials down, and slow growth yield chasing assets and stocks up. Number two in Keith's macro notebook, oil. Another one-day bounce in oil is met with more selling. WTI down about 80 basis points this morning to 81.51. No support on the intermediate term basis to 79.98. Gas prices, and this is one of the data points that the bulls point to. The declining gas prices are positive for the consumer. They are to a point, but gas prices are only about 6.5% of the median consumer's budget. In our view, that's not nearly enough to offset either the all-time highs in U.S. cost of living or the wealth compression we're seeing from falling stock prices and what we think will be even more falling home prices. Third thing in Keith's macro notebook, U.S. 10-year yield meandering around sort of the low end of its intermediate term range, which is 2.61 to 2.35. Don't forget the 10-year yield, like oil, has crashed in 2014, down about 23%. We've been obviously consistently on the right side of that call, and it's highly sensitive to U.S. growth slowing data. Darius put out a really good note last night, but we're definitely getting increasing evidence that growth is continuing to slow, which will be supportive of lower yields. And with that, those are the top three things in Keith's macro notebook.